This meeting is being recorded.
Invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. And this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option.
Hey, Mike, we lost your audio, I think.
Oh, start over. Oh gosh. All right. Well, you know what? You guys all saw the disclaimer: stock, crypto, and options trading has large potential rewards, but also large potential risk. You saw that, right?
Yep.
Same every week. Good morning, everybody. Welcome to Snipers Live. We have the markets opening in 29 minutes. Let's get in and let's take a look at what's going on. I'm going to start by going into the futures and starting with the /ES. That's the S&P 500 futures. We're down just a little bit. Nice resistance up here at 4,200 and support levels at 3,900, 3,800. Like nice choppy sideways market, really absent of any serious directional bias. Let's take before I go any further, let's just take another look at take a look at the news. And I've got something this morning similar to what we did last week. And part of what you can do with the sniper's approach is just look for train wrecks or really good news. You can scan the news like a ambulance chaser lawyer would do and just take a look at what's going on. Recession, that word is back in the ether at the moment. People are saying recession's coming, recessionary fears. That's keeping the markets from rising and maybe even could be a catalyst for further downside. We'll have to wait and see. Not much of a down move so far today. Just taking a quick look here. Not seeing a whole lot of stuff here on the radar for this morning. Bloomberg is another site that's good to go to. Bond market is overplaying the risk of deep recession, according to somebody here. Let's see. Not seeing a lot. I looked this morning. I'm just taking another quick look. So I always like to see, like we saw last week where oil was up due to OPEC cuts on production. Things like that are really good for finding opportunities. Don't see any. In the week ahead, before we go back to the futures, I meant to mention this earlier. We've got the CPI coming out on Wednesday. Consumer Price Index. That's one of the key inflationary measurements or reports that's coming out on Wednesday. The PPI on the following Thursday. Producer Price Index. So those are two very important inflationary reports. If they show inflation is contracting, getting better, less, then we may see a bullish run. And then, of course, vice versa. Jobless claims. Jobs market appears to be cooling off a little bit, at least from last week. So we've got another potential market moving catalyst on Thursday. And then Friday, retail sales. Here's the problem. If us consumers are still buying expensive stuff with great veracity, like we have been, then that could bring the markets down, surprisingly, because that's an indication that inflation is not abating. I mean, it makes sense. If we're out there buying expensive stuff, how is inflation ever going to abate? And it won't. Okay, so that's the S&P 500. The Dow /YM, similar pattern. Strong resistance right up here around 33.4, 3,400. Nice resistance there. We are above the 200-day average. Let's take a look at the NASDAQ. The NASDAQ is tech stocks. NASDAQ's been on a tear, setting new highs right about here, and we're down a little bit there as well. Super strong support right here around 12,900 or so. Certainly 13,000 would be another. So yeah, kind of a flat day today to start. Let's take a look at the let's see the Russell 2000 /RTY. These are small caps, and the small caps remain below the 200-day average. So as snipers, let me just say this other point. Oftentimes the Russell 2000, the 2,000 smallest market cap stocks in the United States, sometimes they lead the market in a particular direction. And it seems like the Russell wants to lead that direction to the downside. Again, we got support levels to deal with, 1,700, 1,650. But one approach in snipers could be to look at the S&P or the Russell 2000 small caps and look for the worst stocks in that most bearish index. So that's another approach to finding these really cherry trades. What else do we want to look at here? We can look at oil /CL. You know, this happened last week when last Sunday, in fact, the news came out that OPEC was cutting production. That drove the price of oil up, and it's just hanging right up here between above 82, right at 80 or so. Strong support there. You know, our USO credit spread trade we pulled off for a cent the following day on Tuesday. That could be another good trade for us to go after this morning. We could just do another one. The other one works so well. Why not do another one? We could even consider an iron condor on this. You know, how far is oil going to go up? Maybe we sell a call credit spread up here, and maybe a put credit spread down here around 75, 76, and then surround this stock with two credit spreads. Doesn't look like it wants to go up much further. We've had a whole week, and oil has stayed sideways. Sideways prognosis. Maybe it runs up to the 200, down to the 50, and we sell credit spreads on either side. I just thought of that, and maybe we'll do that this morning. The other thing I want to offer you all is if you have any stocks that you're looking at, please feel free to put them in the chat box, and we can take a look at your stocks too. Let's see, what is gold doing? Gold's down a little bit. I think Carla's going to be happy about that if she's on this call this morning. But gold's down a bit after setting that multi-month high here. This was what, Thursday, Wednesday? Oil has hit a resistance level and has come back just a little bit. That's probably because the US dollar got stronger, and we can look at that in a bit. What else? Oil, we looked at. Bitcoin, come back to that. Silver is another stock we've been looking at, and silver is really setting. I mean, this is a beautiful buy signal here, or bull signal here, as silver cracked above this resistance level here. Let's call it 2450, well above 2450, and the volume on that day was above average. So it's safe to say, well, safer to say that we could sell the credit spread on silver too. Where? I don't know, somewhere maybe down here at 2350, 23, depending on what's available on a premium front. So there's another opportunity on a credit spread trade. Bonds, what are bonds doing? Bonds are rising a bit. This could be risk off, y'all. I mean, the Fed meets the May 2nd and 3rd of this coming month, and they will probably lift rates another quarter point, 25 basis points, and bonds are rising. That's typically what you'll see, is bonds dropping in a rising interest rate environment. And certainly we're expecting more rate hikes coming up within about a month. So, but bonds have gotten stronger, down a little bit today, up from Friday's action, but possibly we'll see bullishness there. So another idea would be to sell a put credit spread underneath bonds. It's another idea. These credit spreads are everywhere. What else? Let's look at Bitcoin. Bitcoin's been going sideways. This was kind of a risk-off move in Bitcoin when the banking crisis hit, and money flowed into Bitcoin because there was fears that people were going to lose their money in banks. And so Bitcoin rose as an alternative to putting your money somewhere else, and so far seems to be flatlining right up here around 29,000 resistance. Potential trade down there. We could put a trade on BITO if we believed that Bitcoin was going to stay higher. Now, I would say on Bitcoin, let's put up BITO, B-I-T-O, the ETF that tracks Bitcoin. Yeah, like moving averages here, maybe 15 if we could get any premium. 16 would be too close. 1550 maybe, but I would like to, if I did anything on Bitcoin or BITO, I would sell a 15 put for 1 or 2 weeks out. So there's another one. They're just everywhere, Let's look at the VIX futures, and they're not doing much at all. So although the markets seem to be coming down a little bit, there just isn't a lot of fear in the markets. All right, there's the VIX futures /VX is up a little bit. So that tells us that the VIX itself, this is as of Friday's data, it's going to come up. So options are not very expensive right now, and the markets aren't really pricing in any kind of correction, any serious correction, and that's what we have. Let's look at natural gas. I have a future symbol for natural gas here. Natural gas /NQ. Oh, that's the wrong one. No, do I have it? NG. I thought that was a G. That's a Q /NG for natural gas. That's what I wanted. In the cellar. How far can natural gas go? Down. How far? I don't think it's going to go to zero. So, bottom fishing, selling a put spread, maybe at 2, certainly 150. Bottom eating. Natural gas isn't going to zero. People use natural gas. We certainly use it here in Costa Rica. So natural gas is a potential, sell at 152 maybe, sell and get in. You could even sell a naked put on natural gas with the stock at 2. You sell a put, and if you get assigned, you take natural gas at a discount. Knowing that it's not going to zero, probably could go up from there. There's another one. They're just everywhere, every freaking where. All right, let's take a look at our portfolio. These are the open trades. Well, USO was closed. We'll look at that one in a minute. Apple was one we put on March 31st. It's up a little bit. So there's Apple. Nothing to do here. This is where you follow your rules, and the rules are quite simple. You have a GTC order in to buy the spread back, in this case for 2 cents, which is 10% of the original credit of 24% or 24 cents. So we want to put a GTC order to buy this back for 2 cents. And then if the stock closes below the break even of 157.26, then and this is the break even here, then we'll get out of this trade. And depending on when that happens, if it does happen, we could be down 130. But remember, as time approaches, as Friday approaches, the red line will start to come this way. If it takes longer than sooner, then we could very well even break even right at the break even if the stock is there at expiration on Friday. So that one's looking really good. Let's take a look at our USO trade. And this inspired me this morning. Actually, on Tuesday, it inspired me. This was the trade that we placed Monday, and I got 12 cents on it. But when we first tried to put this trade on at 9:31 or so, the credit was 24 cents. And then by the time I actually placed the order, it was down to 12 cents. And then by 10 o'clock Eastern, 30 minutes into the market, that spread was only worth 4 cents. So that's the key for this morning as we get into our lesson for this morning. And that is to grab these on the open. Because if the stocks if a stock is moving pre-market, IV is going to be up, and that gives us an opportunity to snipe some profits. Look at this. We sold for 12 cents in the morning. By the end of the day, we were up 8 for a 21% return by 4 o'clock the same day. And then the next day, just next day, we ended up pulling the trade off for a 28.9% profit in a matter of 2 days. So that's the kind of trades that are available if you know what you're doing and you understand that options on stocks that are gapping up or down on good or bad news in the morning, in the first 15 minutes of the morning, the premium can be very elevated. So that brings us to the lesson for today, and it's this. You pull it up here. I always try to come up with some catchy names, but this is going to be called Sniping High Prop. Hold on, let me put this up here and start it clean so we can do a nice recording. So we're going to talk about sniping high probability profits on the market open using pre-market movers. All right, so what's really cool about news that happens before the market opens, pre-market news, is that it generates oftentimes a feeding frenzy, particularly on bad news. And this feeding frenzy, as market orders come in the morning, market makers are trying to grab as many orders as they can. It churns up the market open like a shark feeding frenzy, driving up option premium. And that's what we call implied volatility, or IV. Options are expensive at the open, and then just a few minutes later, they can be a lot cheaper, as we saw with the USO trade last week. So really, the system is all about finding stocks that are moving pre-market. All right, now Tom's Tools, which we lean heavily on here, doesn't have data until 10 a.m. Half an hour after the market opens is the first time we get a shot at looking at some data within Tom's Tools. So we're going to need a third-party product, and there's a lot of them. There's a lot of them out there that will give you pre-market news. You know, MarketWatch, barchart.com, Bazinga, and of course Thinkorswim. We'll look at some of these in a minute. And then the idea would be to sell an out-of-the-money credit spread where you don't think the stock's going to make it back to in the 7 to 14 days that you hold them. One rule of thumb, and it's a rule of thumb, is to receive at least 1% of potential return on investment per day in the trade. So for example, if you had a 14-day credit spread, you'd want your potential return on investment to be at least 14%, 1% per day in the trade, and then sell at support and resistance and as far away as you can get. You know, don't take much more than 1 percentage point a day. Move the credit spread as far away as you can on the other side of as many support or resistance levels as you can to increase your probability of profit. So we're going to go after probability in this case and maybe take less. All right, this is all about not losing and letting the credit spreads, the premiums, the credits take care of themselves. So that's what I wanted to talk about this morning, especially given the 2-day trade that we just placed last week on USO. Okay, so a couple places you can go. I just did some Google search. Here's a place, barchart.com, and we're just going to go looking to see what the most actives are at the moment. If you go barchart.com, let me put this in the chat box in Zoom. One sec. I'll give you all these websites here. So there's barchart.com/pre-market trading. And you just take a look. What's going on? I imagine this is what lawyers do on Monday mornings after a weekend, looking for people that have had mishaps driving their cars, similar kind of thing. And I really like the laggards, the droppers, the best, but sometimes you can find some good ones on the upside as well. So these are the most active. Tesla, you can read some of these. First Republic Bank, AMC. So those are the most. Apple is down 1.28% pre-market. So those are the most active. Those that are gaining the most are listed here. And so let's see, this one is up 17%. I've never traded that one. I don't believe that one has options. Some of these, I'm not sure even have options. We've got to check that as well. The Arena Group up 16%, 13, 12%. Costco Holdings up 10%. So those could be some potential great trades for this morning. On the downside, Audio Codes is down 11.9%. and MCOM down 10%. We could look at those as well. Let's see, we got pre-market. I haven't seen this one yet. Pre-market gaps up. Yeah, we got to look at that one. Let's look at AREN. Okay, it's up. It's up to 470 from 4. That's percentage, so it's up here. Maybe if there's some good news, we could look at that one. I want to look at Micron as well. Here's a pre-market gap downs, Audio Codes. Let's take a quick look at that one, AUDC. And y'all feel free to look for yourself. I just looked at that one. Feel free to look for yourself. If you see anything that you like, let me know. Let's go through some of these other ones here. This one is Bazinga. Let me zoom in a little bit so I can see it, and then therefore you. So here's, look at this one on PLX Pharma, up 146% pre-market. What? Let's look at that one, PLXP. Oh, wait a minute, the stock's 10 cents. I need to look at the stock price as well. That's important. It's a 26-cent stock. This one on Onosec Medical, up 93%, $2 stock. Maybe we could sell it too. Let's look at for something with a bit more weight in terms of price. Here's one on Guard Force, GFAI. I don't like this one. It's too volatile. You see that? So I'm going to kick a lot of these out because I need you to be able to identify ones that don't make so much sense. This one is up to 15, but my God, it's so volatile. I'm just not that interested in something like that. So I'm going to leave that one alone. I mean, it's up at 24 one day and down to 4 the next. That's too much volatility. We could easily get hammered on a credit spread on that one. Let's see. And then on the downside, Engine Gaming and Tupperware and Liquid Media. Let's look at some of these. Game. So this is pre-market. I mean, this is Friday's action, and now the stock's trading at 149. Again, it's a small stock, $1.45. I don't know if it's even got options. Let's take a look. It does. Yeah, just zero bids on all these things, no liquidity. Let's leave that one alone. Tupperware, though. Check out Tupperware. When I was at Oracle, that was one of my companies that I used to call on. They were based in just outside of Orlando. So let's take a look at Tupperware pre-market. This stock is at 242. That was Friday's action. It's now at 146. So it's down here, everybody. It's down. It's sub 2 at the moment. Let's take a look and see what the news is. Tupperware shares tumble pre-market on growing concern warning. Never heard of that before. A growing concern. A growing concern warning. Tupperware brand shares are trading lower after the company announced a substantial doubt about its ability to continue as a growing concern. Wow. That's like, I don't think we're going to make it. I think we're going to go out of business. And of course, that's going to create a lot of fervor. We have 7 minutes before we start. Let's see where Tupperware is again. One more sec. Tupperware pre-market is trading a whole dollar less, which is a massive drop in the stock. 242 was what it was on Friday, and today it's at, let's call it 148. Let's call it 150. So Tupperware's way the heck down here. So what I want to do on this one, given this bad news, is I want to sell at 2. I don't know what's going to be there in 6 minutes, but I'm going to get it ready. Now, I don't know. We might have to do something with 1. These are the calls. Slippage is a little wide here now. Look, 15 cents on 50. I don't know what it's going to be on the open, but on these, it's pretty common for slippage to be wide. Remember USO last week, the slippage was wide, and that's what's going to happen when you're dealing with a feeding frenzy. The IV is high and slippage is wide. And so by the end of the day, that slippage should narrow as the IV cools off. The options get a little cheaper, but still probably expensive, and we'll make money on that day, and the slippage will tighten again. So that's the general rule on these things. Let's go out a little bit further and check it out there. Yeah, slippage is a lot tighter when you go out to 39 days. We've only got 11-day options on this one. They expire on April 23. So with 5 minutes to go, here's what I'm going to do. I'm going to go ahead and build the trade. Sell at the bid. Buy at the ask. Control, click. This is Thinkorswim's way. Now it's showing 40 cents credit. It's not going to be 40 cents at the open. I don't know what it's going to be because we don't have prices yet. So here's what without Tom's tools, I could put this in Tom's tools, but I want to give you a formula to help you calculate potential return on investment based on credit received and strike width. So in this particular case here, if we were able to get 40 cents on a $1 spread, here's how it breaks down. Okay, so if your spread width is 2 and your credit is 40 cents, then your risk in the trade is going to be the distance, the spread width minus the credit. So if you can sell this spread for 40 cents, the maximum value for the spread is 2. All right, so if you sell a $2 spread, maximum value of, I'm sorry, it's a 1 point spread. Excuse me, hold on a second. The spread width is 1. Let me get that correct. Spread width is 1. If you get 40 cents on a $1 spread, then the risk is 60 cents. All right, so you sell a spread for 40 cents, it devalues, then you buy it back for, 4 cents, and you net 90% of the overall credit. If we were able to get 40 cents, our max credit on this trade would be 67%. Okay, so I don't know what it's going to be worth. None of us really do. It's going to be tough to figure that out. Let's see, we could try 1, but the stock's going to be trading at 150. Not interested in that. I think 2 is the place. So here's what you can do. Now calculating, let's just say we could get 30 cents or 25 cents. If we can get 25 cents, then our max risk in this trade would be 75 cents. 1 minus 25-cent credit is 75 cents risk for an ROI of 33%. Now, I don't know if it's going to be worth 25 cents, but I could certainly go out there and then try. Why not? I could put a line in the water at 25 cents. Oops, not $25, 25 cents. So showing the natural price at 30, we're going to be a whole dollar less, so there may not be much credit at all, but we're going to certainly try. I'll have that sitting there at the market open. Next question is how many contracts? Well, you take a look at your risk. 10 would be 750, 75 cents, $75 of risk divided by 500. Going to get out my trusty calculator. $500 of max risk divided by $75 of risk per trade is 6 contracts. So I'll do 6 contracts and let it sit there at the open.
It might have 2 cents in there. 0.025.
You're right. Thank you. Thank you, Paulina. There we go. That's what I wanted to do. Selling the 2, buying the 3, 25-cent credit, 6 contracts. Market opens in just under 2 minutes. Confirm and send. Send. Let me go ahead and populate this in the the Sniper WhatsApp live feed. If you're interested in playing along, certainly paper trade it. I think that's a good idea. Let me get the, I don't have the feed up just yet. But snipers. And if you're interested, this is the trade. I'll put it in Tom's tools now while we're waiting. But that's the one. If you want to get in and play with this, that's cool. Do it. The other one that I like that I found was Micron as well. I want to jump on the open on Micron as well. Micron was in one of the other services, and Micron is rising today. This is really good news. Micron shares are trading higher after competitor Samsung said it would make cuts to memory chip output. So its major competitor is cutting output, which of course will impact revenues. And right now, you can see where Micron just opened. Micron is right up around 62 or so. So now you look at this thing going, well, how about if we could sell a credit spread maybe under here somewhere, as close as 57, maybe 56. So I want to sell underneath as many support levels, 60, 200-day average, 58. There's a lot of them here. And sell down here and see what's available on Micron. Let's take a quick look. I'm also going to change this to vertical spread so I can more easily see the credits on these. So where do I want to? I would like to sell at 56 or 57. Where's my strikes? Here we go. 56 or 57. 56 is offering nothing, 3 cents. 57, 10 cents. That could be interesting. 10 cents on a 1-point spread is 11% by Friday. That's a nice snipe. The other thing you could also do is go out another week out, see what's available. We could sell the 57, 56 on Micron. This is April 21, a week from Friday, 57, 56. That's going to give us 23 cents. Now it's down to 12. So you got to move fast on these. Otherwise, you can lose your potential credit. Here's the 56, 55 offering 9 cents credit. What about the one for this week? Sometimes the IV is higher in the front month, or front week options in this case. Friday options, not so much here. So really, it comes down to your taste. You know, where do you want to go? I tell you what, I like going out 2 weeks, getting down to 56, selling right here. Stock's rising still, sell it at 56. The other alternative would be to go a little higher and sell the 57s for this week. If you did that for this week, you get 6 cents. So that's a possibility as well. Let's go after the one that I do like, I think the most. That's the 21, selling at 56. Now my Zoom window's in the way. Selling at 56, buying the 55s underneath. Showing 8 cent credit, 9 cent mid price. Let's see. So 9. So if we got 9 cents. Yeah. See, you got to move fast. I'm just going to go ahead and go for 8 cents on this. 8. See, that would be 8 cents, 92. So I could do 5. I'll do 5. And see if we can get our 8 cent credit on that bad boy there. Confirm and send. Let's go back to monitor and see what's up. All right, so there's Tupperware. I've asked for 25 cents. Remember on the open, I said, well, I don't know what it's going to be worth. Well, it's not 25 cents. It's 10 cents. So then the question becomes, okay, I just got Micron. Let's see here. We just got Micron for 8 cents. We just got Micron for 8 cents. I'm going to go back to Tupperware now. Let's cancel replace this thing. I'll build the risk graphs here in just a sec. So the mid price is now 8. We don't have much granularity in our options. I mean, you could go further out to 39 days. You know, that's fine. Tupperware said they don't know if they're going to be able to stay in business. What if somebody came out and bought them? That's always an issue with established companies that have been around for decades. They could be a buyout target. So you got to be careful about that. It is possible we get a gap up. So I don't want to be in 39 days. 11 days is as long as I'd like to play here. So if we were able to get 8 cents, now it's down to 5. See, it's dropping away. So if I was able to get 5 cents, let's say, it's not going to be much. Yeah, that's 5% by the end of the week. We could put a line in the water for 8 cents though, and that would give us 9% by Friday. That's about, that'll work. You do 5 contracts, drop it down to 5 contracts, and let's go for 8 cents. Don't think we're going to get it. I don't think we're going to get it, but it won't hurt. If I can get 8 cents anytime today, I'll take it. So I'm going to go ahead and change that down to 5 cents. All right, we did get one on the board on Micron. Really good news. Its competitor is going to not sell as much stuff as them. So we got a good opportunity here. I'm going to go into Tom's tools now. By the way, our portfolio, 86% wins, almost 10% average profit. And that's with some long-termers. Trades, edit, create, trade. Micron is the stock I want. Let's pull up the risk graph. I'll post this in Tom's tools. Also give you access to the risk graph on the discussion boards. So we're selling the April 21 56 puts. April 21, sell. Now, when you're using Tom's tools, it's really important that you replicate the data from your broker's environment in Tom's tools. So we sold 5 of the 56s for April 21, and we bought 5 of the 55s. And then I can copy in my prices as well. 32 and 24. We sold the 56 put for 32 and bought the 55 puts for 24. Just plug it in. 0.32, 0.24. Yes. Hit risk graph. And there is the lovely trade. Not showing. It currently doesn't show the stock way up here now. And that's because the data doesn't update until the top of the hour at 10 a.m. Eastern. And when that comes in, you're going to see a much higher probability of profit than this. It's already at 69%, but with the stock actually trading up here now, this potential profit will be even higher. Not potential profit, but potential profit is the same at 8.7% over the next 15 days. We kind of missed our limit on ROI on that, but that's okay. I think the probability is good. Let's go ahead and save this in Sniper Live Trades. I would imagine the probability is going to be something like 80+% on this one once the data gets refreshed. Okay, what else? Let's take a look at some other ones here. Oh, the other place you can find them.
The recording has stopped.
Yeah, recording stopped, Gerardo. Gerardo, can you still hear me?
His connection might have dropped out.
His connection's out. Okay, but you can hear me?
Yeah.
Oh, good. There's a lot of them here. There's a lot of places.
This meeting is being recorded.
He's back.
Hey. Venezuelan internet, man. Gerardo's
Well, actually, it was my dumb fit ruined the connection of the router.
really? You were doing so much downloading, you lost the router.
No, I unplugged the router with my foot.
Oh, nice. Yeah. Goodness gracious. Bless your heart. Bless your heart, Gerardo.
Big foot.
Yeah. So there's a lot of sites here. This is kind of it's fun, it's fast. I like trading this way. Thinkorswim also has a lovers and losers, pre-market movers as well. You can check here for big movers. There you go. So these are the pre-market movers sorted by net change. And you can look through here as well. Tesla's down quite a bit this morning, down 8%. SPX, that's not the percentage. Here's the percent change here. So you can sort by percent change. And here's the YVR down big. There's the AUDC we talked about. So these are like, in my mind, the ones I like the most, because these are stocks that are obviously in some kind of trouble. Now, you can also link the news, the chart, as well in Thinkorswim. You can link all these things using this button here. And notice here, that's red. So you can say, all right, I want to link my watch list with my news, pick the same color, with my chart, pick the same color. And now if I was to click YVR, then that will drop me right into the chart up here and then the news here. So you can very quickly move through the list and check it out. And so we can see why this stock's down quite a bit this morning. Let's see. Oh, wow. Liquid Media Group receives non-compliance notice from NASDAQ. So possible fines there. The stock's only 19 cents, so I should have looked at that first. Keep an eye on the actual price. This one's at 12. We looked at that one before. That's Octo, AUDC. Oh, I do like that chart though. Let's check out the options on this. Now this is a little too illiquid. All right, so this is AUDC. What's up with bad earnings, issued Q1 guidance, which was bad, of course, because the stock's down. So really crappy earnings announcement. Let's go ahead and put singles up here. And see that slippage? That may flatten out. Stock's at 1246, 11-day trade. Yeah, that's just gargantuanly wide. It's super duper wide. It's like 60 cents on 90. That's 67% slippage. I'm not so certain this one will flatten out because I don't know the company. It's one of the smaller companies, and I don't know if I want to play with it. Octo, no instruments on no options, oust. This one could be something. So you get a lot of illiquid stuff when you do this. But that's another place where you can go out and find good opportunities. The other one here is looking for analyst downgrades. And you can see here Square it was downgraded. It's only down 2% though. Let's look at Square. Yeah, it's not down much. It's not a train wreck. That's what we want. We want something really, really bad or really good. So no real opportunities on the downgrades. We could look at upgrades as well, and we can sort by percent change. And this one on the top, EBS, is up big. Emergent Biosolutions. Yeah, it's up to the 50-day average. What's the news? Upgraded to buy from hold from benchmark. FDA, and that was a while ago. So today, I just got an upgrade from a hold to buy. Not super excited about that one. But there's lots of ways. The other way you could look at is you could go top 10 gains in the NASDAQ or losses in the NASDAQ. And that New York, let's do that. Let's go biggest losers in the NASDAQ. Here they are. You might just even go keep trade up here and just move through because a lot of these don't have options. Here's the one we talked about already. SHLT, no options. Now this one's down 10%, no options. We can go from the NASDAQ to the New York Stock Exchange, BPT. If any of you have any, please feel free to share. If you're looking at anything bullish or bearish for that matter. MDR has options, super duper wide slippage. Okay, not seeing a lot there. Let's go to top 10 gainers on the NASDAQ for bulls. Percent change. Well, this one's up 41%. I believe that's one we looked at already. GFI, no instrument, no options. EBIX. Okay, this one's more interesting. It does have options. Let's go to a chart. EBIX. Okay. Yeah, I like it. I like it. Beautiful gap up. It opened here and it's got higher. It's gone higher still. Why? Why? What's the news? What's the good news in this stock? EBIX Cash receives clearance for IPO from Securities and Exchange Board of India. So it's an Indian company listed here, I'm guessing. Let's see. Okay. That's some good news. IPOing. I'm a little confused why it's IPOing because it is already listed. So I need to understand that a bit more. Oh, from India. Okay, from India. So it'll be listed in India. I understand now. Now I'm back on board. It's listed here, but it's now going to IPO in India and trade on the Indian Stock Exchange. More money into the company. Companies, a wider audience of buyers. Stock is up big. Let's see what we can do here. Where would we want to sell? 14, as close as I want to get. 12, better. Simple, right? We want to sell at support. 14 would be a nice, or 1450 even, but 14 would be a good place to sell. Then 13, and then 12. That's where I'd like to sell. Let's go to trade and see what's there. 2.5 point strikes. The next available option is Friday, April the 21st. That's an 11-day trade. And then I can just check the slippage really quickly. Slippage is good. Let's do vertical spread. See what's roughly available. If I sold the 1250-10 puts, sell the 1250 by the 10s, that's going to generate 40 cents. So back to the formula really quickly here. So this is a 2.5 distance spread. And if we got 40 cents, then our risk would be 210. That would give us 19% by a week from Friday, 2 Fridays from now, which is a nice return on investment. That's over 1%. It's an 11-day trade offering 19%. So that does fit the formula. Natural price, 40 mid. Okay, we should be able to get that.
It's 52 cents right now.
Is it? Oh, yes, it is. The stock must be dropping, I guess. A little bit, but not much. All right, so what we're doing here then is we're selling all the way down here at 1250. I like this one. Let's see if we can get a bit more, Peter. Back to trade. How many do I want to do? Let's see. If I can get, let's just say I'm going to get 40, 210. My max risk for one contract would be $210. So I would do 2. So let's do 2. And that will get me to just under $500 of overall risk in the trade. I'll put this in a risk graph here in a minute. So let's try to get 40. Hell, let's try to get 45. Do a little price shopping. So selling. Let me give it to you in case you want to play. So I'm not using Tom's tools so much, and you don't, I honestly, I don't really use Tom's tools in my own account when I'm trading credit spreads because they're really simple once you understand the rules. Let's go for 45 cents. I'll take 40, but maybe they'll give us 45. Let's try it. Confirm and send, monitor. Nope, not going to give us 45. Can't hit that button there at the very end of the line. Cancel, replace. Okay, I'll take 40. May I have 40 cents, please? Since you won't give me 45. Confirm and send. Monitor. Waiting. We may or may not get filled on that. We'll let it ride for just a bit. What if we got 35 cents though? It's still going to give me 16% in 2 weeks, 11 days. So 30 cents wouldn't be bad. Another quick trick in most broker platforms, certainly Thinkorswim, you know, once this order got submitted, it got placed on one of 8 different exchanges, and it stays there. Now, when you first place the order, the broker fires it off to the very best NBBO, National Best Bid Offer. And so it sends it to the exchange that has the best price, and then it stays there. If you want to resend it, maybe there's a better price somewhere else, you can hit this button here at the end, cancel, replace, and simply send it. And that will reset it on the exchange that has the highest available bid price for this spread. Now, in this stage, given that 35 cents is going to give us 16% by Friday, a week from Friday, I'm going to go ahead and go for 35 on this. It's not just 47.50. Look at that. So I'm just going to work this order. This slippage is likely to drop away later in the day. Confirm and send again. Send. Don't want to wait too long. Even at 45 cents, it's not. Even though the natural price, now it's down to 37 cents. All right, I'm going to go in and grab it. That price will likely keep dropping. Let's go for 35. It's already dropping down to 30. Confirm and send. Don't get too greedy in the open. 35, 30. Okay, I'm going to let that sit. We got it. I got it for 40. We got it for 40. No, I'm sorry, 35 cents. We got it for 35 cents. So the next step will be to load this up in Tom's tools. Let's do that. Easy way to do that. Trades, edit, create trade, create trade. You can do it here too. Another way to do it. And I'll type in the symbol, EBIX, change, and then just fill out the form. We sold the 1250, bought the 10 for April 21. Sell, buy, the 1250, bought the 10, and we did 2 of them. And then what did we get? 1250, we got 45 cents and 10 cents. Okay, so I'll just plug those prices right in here. 45 cents, 10 cents, risk graph. And again, this is not the current data. The stock is way up here now, but there's our little 16.28% profit in the next 15 days. Probability of profit, although right now it shows 68%. I'm going to say it's probably going to be in the mid to upper 80s, if not 90s. It's going to be up in that 80%, maybe a little higher, with the stock trading way the heck up here. Let me post these risk graphs for you as well. Remember, if you're a subscriber to anything that we do here at MWTC, you also have the Snipers live feed, which I've been using this morning. So here's this one. Let me post it in the WhatsApp feed. That way you have the risk graph itself for both trades. Of course, I need to save this. I haven't saved it yet in our folder. So let me do that real quick. Save in our Snipers live trade. And there's 2 trades for the day to start the day. The other one that I did was Micron. Let me give you this one as well. All right. Anybody got questions or comments? Anybody got trades? Anybody got a fill? Anybody got anything you want to say? Any questions? Any stocks you're looking at? Feel free to ask.
USO still looks bad. It looks good.
Yeah, Leo. Yeah. My heart just lifted when you said that. We got to go get some more of this, right? Let's get some more. All right. Where? Let's see. I don't know what's available. You got to look. Let's go to trade. I've got vertical selected, and I want to sell. I'd like to sell it. I would like to sell at 66, 66.50, maybe 67. This 50-day average is I think the best place. That's 66.5. 66 would be a really nice place to sell, but let's see what we can get at 66. These are the 4-day options that expire on Friday. Nut and honey, 4 cents on a 50-cent spread. I don't know if we get filled on that. That would be 4 divided by 56. Yeah, it's not. It's small. So we probably. I mean, you could do it. 4 cents risk 46 cents. That's what, 9% or so. Available by Friday. That fits the rules for a 4-day trade. That certainly would fit the rules. You might want to do a bit better than that. So I'm going to change my expiration to a week from then. And the options, they don't have half point options then. So I'll just take a look here. 66.65 gives us 12 cents. And that our risk would be, so this would be a 1-point spread, making 12 cents. That's 14% on an 11-day trade. That certainly would be interesting. I like it, actually. One contract would, let's say 6 contracts would get us right around $500 at $88 risk per spread. So I'll do 6. We're going to see if we can get 12. The natural price is 7. May not get 12. Confirm and send. Send. Let it sit there for a little bit and see what happens. What if we got 10 cents? 10 cents would be the minimum that we want to take on this. That would give us an 11% return over 11 days. So that would be interesting. I'm happy to take that. let's go ahead and cancel replace. Just drop it by a penny. And definitely wouldn't take anything less than 10 cents. Okay, just got it. I just got it. We got it for 11 cents. Okay, let's build this risk graph. Thanks for reminding me, Leo. I almost forgotten about that. Now, obviously, the credit isn't as high as it was last Monday. Hold on a minute. Let me get myself oriented. The IV is not as high as it was last week. That's the thing we're dealing with on this one. But still, it's a decent credit with high probability. Selling the 66, buying the 65 for April 21. Selling the 66, buying the 65. So I'm just going to fill out this form as we have it here. 46.35. And we did 6 contracts. Let's hit risk graph. And there you go. And there you go. Oh, wait a minute. I'm in the wrong. I forgot to do something. Portfolio, edit, create trade. Be sure to do this step that I totally forgot. Change the stock price, USO. It's really important, obviously. April 21. April 21. It does make a difference that you correct stock. It really does. It's really important, that part. 66, 65. Contract pricing 46.35. You know, as I'm doing this, there's so much probability that we have, as evidenced by the performance we've had for a while now. But it's really a great way to trade. And I'm putting these on, and although we do have considerable risk in the trade, considering the amount of credit we're getting, that's really important to note. It is possible if USO tanked, OPEC doubled supply or something, you know, anything can happen. I don't think they're going to stop their output, keep their output. I don't think they're going to increase their output after just announcing they're going to cut it by 1.1 million barrels a day. So I wouldn't expect there to be any of that kind of news in the next 2 weeks that they're going to rescind that. So I just think this is really a great trade. Let me go ahead and post this one in the WhatsApp live feed. And then that'll be it for the day, I think. All righty. We got 3 of them. One of them still hasn't filled. Let's look at that one real quick. EBIX trade. Did we get that one? We did. We got EBIX USO. We're still waiting for Tupperware. Look, when I started, if I had gone for Tupperware first, we would have gotten filled for more than 8 cents. And this is the important part, everybody. This is the whole idea of grabbing it in the first half hour of the morning. You know, what was available 15 minutes ago at 8 cents is now 0 on Tupperware. All right. Now, if I'd started at the open on Tupperware and not EBIX, or whichever one we went through, what did we get filled on first? Anyway, we went for 3 others that got filled. But had I gone for Tupperware, very likely we could have gotten in for, you know, 8 cents, maybe higher on the open, and made almost max profit by the, 30 minutes later. So that is really the idea, everybody. And it's a fun game. It's the feeding frenzy game. It's fun. It's over in 30 minutes, maybe an hour, but first half hour of the day, go looking for good news, bad news, pre-market news, come in and sell credit spreads far away from the heat for a really high probability of profit, selling that expensive premium. So that is a wrap for today. Let me check the chat box here, see if there's any questions. Leo, we got you. Mike Aruda, you got 36 on what? What'd you get that on, Mike? 36, was that on the, let me see, that must have been on the EBIX trade. Okay, see, I got 35, so we're all in the same ballpark. So I'll let Tupperware sit there for the end of the day. If Tupperware pops up for some reason, we might get a fill, but that one's not going to happen. But we did get 3 today following this system. USO, EBIX, Micron, all those trades have been put in the WhatsApp feed. And in about later today, you'll have all of them in Tom's Tools, not Tom's Tools, in the MWTC Forum, along with the trade links. So stay tuned for, if you need to get the risk graphs in your own account, just go in and show you how to get there. If you're not exactly sure, you go to MW Trade Coach, log in, and then you go to snipers from your library, members. I'm sorry, go to the forum first. You can go to your snipers dashboard if you like, but go to the forum. And then you click snipers. And just a bit later today, you'll see a post for the 3 trades that we just got filled on this morning. All right, everybody, that is a wrap. Any last questions, comments? Feel free to ask. Congratulations, Mike. You got 36 cents. Always a pleasure being with you. Have a great week. We have earnings live coming up today at 2 p.m. Eastern. I'll be doing that today. Matt's not making it for the next week, and I'll tell you why when you get back together at 2 p.m. for earnings live.